Good morning, traders. Welcome to the Elliott Wave Street weekly update. I'm Juan Maldonado, and it's a pleasure to start the week with some of our trading plans. Today, we're going to talk about the euro, the dollar Swiss, and the S&P. All of them are showing interesting trade setups for the week. Before we start, I want to invite you to sign up to the Elliott Wave Street membership. You can get our daily point of view, Elliott Wave point of view with trading plans, with videos, with charts, and more. And here on elliottwavestreet.com in the membership tab, you will find all the details about the membership. We offer the forex, the stocks, and the full access membership. Here you are gonna find all the instruments that we cover and the characteristics of each of the plans. Also, we are offering a special trial for the first month, so you can take advantage of that trial to try it out for a month, and you will find all the wave counts and all the value that we have inside the membership. All right, so let's talk about the euro. The plan this week is to have the euro um, testing the supply at this area, the previous high. So it's above 106. So the first step for the setup is to have the euro moving above this resistance area. Once we have the price above this area, clearly there we are going to have a lot of stops. So it's a stop hunting phase. We are going to have a lot of stops right there because all the shorts who went short here, here, whatever, they are leaving, some of them are leaving their stops above this area. So clearly it's a liquidity area. And here the plan will be to take them out. Once we complete that process, the next step is to have a nice red candle closing below the area, and that's going to be the entry, sell entry. I want to short the euro this week, if only if I have the setup. Once I reach the 1-to-1, I'm going to use a 30 to 40 point stop loss after the entry. So once I get the 1-to-1 risk reward ratio, I'm going to book partial profits. So usually I take out 50% out of my trade. So 50% out, and I leave the other part open. And maybe later, depending on the price, I can book a little bit more of profits. But the plan is to get to this previous low, right here. 103.60 is my target for the week. So first of all, we need to have the setup, and then we will define the the trade management during the road. Let's continue with dollar Swiss. It's pretty interesting, the price action on the dollar Swiss this week. I'm reading this pattern as an accumulation process. We got the price uh, finding demand after reaching this low. The price makes the lower low, and we have another nice demand showing up. As you can see, the price moves up, so we know that the institutions were buying there, and it creates a new support down here. And according to the wave count, this will be an ending diagonal wave. We can have here, you can see here, we have wave 1, wave 2, wave 3, wave 4, and here comes wave 5. Wave 4 is a special because it was able to move inside the price territory of wave 1, but didn't cross the end of 2. So this is called an ending diagonal wave. The ending diagonal wave usually is the last leg of the cycle, and this week I'm looking for another low. It could be a three-wave sequence. That would be fine. So the price moving under the low, taking out all the participants here. And if we have the same action that we have here, or the same one that we have here, Shapes can be different, but the essence it will be the same. So rejection on after the lows, that's going to be my entry point. Now, after we are in the trade, we have two options. One is that the market is able to make a hard high above this high. And the second option that I think is the highest probability is to have a three-wave sequence and retrace at least a 50% of the entire leg down. So if that's the case, if we confirm during the road that we are having the ABC, I would like to sell this ABC, so closing longs and going short. It depends on the structure that we find during the corrective wave. You see, it's another reason to sign up in the for the Elliott Wave Street membership so you can get the updated trading plan every day. So we are looking for that validation in order to start selling the dollar Swiss. And here we have the S&P. On the S&P, I'm looking for a little bit more of validation to confirm if this is the right wave count. The leg up was pretty steep, so a lot of buyers were showing up here. But I would like to have a bigger corrective wave here in terms of time or deeper. And then when the market makes the high, I want to see if it's able to break out and continue, or if it breaks up and reverse. And if that's the case, that will be a high probability sell trade back to the lows. I believe this is likely to be a bull trap. So bringing buyers, then squeezing the market out, pushing the market lower, taking out all this liquidity here. And from there, we can have a nice reversal on the S&P if we have the setup. But we will see. We will talk about that setup later when we are there, if we get there. But for now, this week, I want to focus on this market top. But again, I need to see some price action happening here to act as a stop in action. The stop in action during the wave 4 is key to find the end of the trend. All right, traders. So that's the plan for the week. Don't forget to sign up for the membership, for the Elliott Wave Street membership. We have this special offer of the trial, 1 month trial for just $19. And you will get immediate access to this fantastic Elliott Wave Street world. You will get the live market analysis every day. And you are going to get also some education about Elliott Wave and tools to find the end of the waves and to understand better the market cycles. So please have a fantastic start of your week. I'll see you soon. Take care. Bye bye.